investor. This is Edwin Epperson, manager of Blue Bay Capital, and we are helping capital investors make wiser, more informed decisions. Today, I wanted to cover why invest in notes. Note investing is a better way. As Rich Pina said, there is always a better way to do something. So today, we're going to be discussing why private lending or investing in notes specifically is a better way. First, we're going to cover the security aspect. Then we're going to cover the cash flow. I think it's very important that investors understand the cash flow aspect of private lending and actually how it can be superior than other forms of cash flow investments. Last but not least, we're going to cover control. Why control related to private lending is so powerful and cannot be found anywhere else in any other strategy. We will, of course, cover Blue Bay Capital's turnkey solution and how our turnkey solution can help passive investors who are seeking passive income to invest just like the banks do. So let's talk about security. What does it look like? What does it mean? So in this instance, we have a private lender who has money and we have a borrower who owns an asset. The borrower is willing to pledge or allow the lender to collateralize that asset in exchange for their money. So the lender loans the borrower their money, and the borrower signs a note and gives it to the private lender. Now, note, promissory note, terms are interchangeable. What is so unique about private lending is that at the same time that the borrower is signing the note, they are also signing a security instrument, also called a mortgage or deed of trust, and that document is recorded on public record. That document, mortgage or the deed of trust, and that is state dependent, it secures the promissory note to the asset that it is collateralized against. So that's what makes as a broken down to the simplest degree, that is why private lending is so powerful. Your note, which is a physical representation of the money that you loaned the borrower, is tied, it is secured to the asset via a mortgage or deed of trust. And just as a caveat, if you have a promissory note, but you do not have a mortgage or deed of trust securing that promissory note to the asset, you actually have an unsecured note. Just because on the promissory note, the property address is listed along with all the other information, if you do not have a mortgage that was executed by your borrower and you or a third party ensured that that mortgage is recorded, you actually have an unsecured loan. How does security work? Why is this so important? Well, loans are secured through the mortgage or the deed of trust, as well as they are enforced by the courts. And the way this works is you're basically playing along by the bank rules. And see, banks, they advocate Congress, they advocate the lawmakers to create laws that benefit them. Those laws are then enforced by the courts. So what you have here, the banks are advocating for laws that are in their favor. And then the government, and by the virtue of the laws of the land, the courts will uphold those laws that protect the bank. They will enforce them. Well, when you become a private lender, you are basically replacing the bank, and yet the courts and the laws are there to protect you as the private lender. Very powerful. And if you can wrap your mind around this concept, it's incredibly, it can be life-changing, especially when you're talking about generational wealth building, that you can invest and become like the bank and have that type of control. So again, let's get down to it. What makes the mortgage so powerful? I mean, really, it's secure, but what does that mean? What does that look like? Well, let's do a real quick exercise. Go ahead and in your browser later, or you can open up another window right now. Type in Hillsborough County Clerk of Court, and that is Hillsborough County here in Florida. And when you go there, the Google search is going to pop something up like this. You're going to have your Hillsborough County Clerk of Court option, and then underneath that, you may have some drop downs. Click on the official records public search. If you don't find it there, then simply click on the Hillsborough County Clerk of Court's hyperlink, and when you go there, find the official records public search hyperlink and navigate there. When you click on that and you navigate there, this is what will pop up. Make sure that the name is highlighted so you have a whole list of options by which you're searching public records. Go ahead and make sure that the name is highlighted. And then over here on the right-hand side of the screen, you're going to want to put Blue Bay Capital in the business name section. And in the form field for recording begin date, I put 1st of January 2021 and recording end date all the way to the 29th of October 2022. Okay, and make sure direct party at the top there is selected. And when you click search, you're actually going to find the mortgages that Blue Bay Capital has made in Hillsborough County. Now, this is one county out of all of Florida, but this goes to show you the power of a recorded mortgage or deed of trust. Now, Florida is a judicial state, so we require mortgages. And that also means that when you go through a foreclosure process, you do have to go through the courts, and it can be lengthy. There are ways to reduce that, and that's not going to be discussed in this video, but just know that right there, what you're seeing in front of you, that public record, that transparency, that's the key word. That transparency gives tremendous weight to who loaned the money, how much you loaned. So there's no way if you were to go through the foreclosure process, because this was all under the table, because it was a handshake deal, because it's recorded on public record, everybody is aware of exactly what was loaned, who borrowed, who lent the money, and then that information is out there for everyone to see. So that is what makes the security of the mortgage or the deed of trust so powerful. So let's look at cash flow. We have ourselves and we've got our borrower. The borrower has already borrowed our money. We have a signed note and mortgage from the borrower that we've recorded the mortgage, and now the note sits in our file cabinet. We, depending on the note and the mortgage and how we created those documents, the borrower is now paying us, let's say in this case, every month. So now the borrower is paying us every month, or whatever you determine. And that's what we're going to cover next, is the power that you have when you become the bank. You can determine, you get to make the rules. So let's take a look at this. Let's look at the periodic payment. Periodic payment simply means a regular, a set interval that is paid on a regular basis. So most people are familiar with a mortgage, which is due on the 1st of every month, right? So you have every payments on the 1st of every month. However, periodic payments could be bi-monthly. Now, you could also do weekly if you've ever rented a property and maybe the landlord wants weekly payments. You could do that. That's called a periodic payment. You could do once a quarter. A periodic payment once a quarter example would be a dividend payment. You could do biannually, and you could even do once a year. You, as a private lender, can determine and make the rules on when the borrower makes their payment. Amortization. You can determine if the borrower is only going to pay interest only. So we have a debt, let's say it's leveraged at 70%. You loaned on a $300,000 property, you loaned $225,000. That amount of your loan does not change for the entire time frame or the term of the loan. That amount will always be the same, your principal balance. So all payments the borrower make are simply interest only. The other way that you could structure it is an amortized loan. Amortized, that's a very confusing word. Amortized loan. What that does is the borrower is paying back your earned interest, as well as they are paying back every month a little bit of your debt. Now, this is the type of loan structure that you have with the bank. So as a private lender, you can determine, you get to make the rules on the structure, the capital structure, whether it's an interest only or an amortized loan. And lastly, we had mentioned this, the term. The term is simply the time frame of the loan. How long is that loan going to be? So you can determine, as the private lender, you want a 6-month loan. Maybe you want a 12-month loan. Maybe you want a 10-year loan. And then, of course, all the other things being equal, you can work out your periodic payment, your amortization, and your term that best suit your needs as the private lender. What does this relate to? All of this falls underneath the aspect that you have control. As the private lender, you get to do the one thing that everybody would love to do with their investments, and that is make the rules that everyone else has to play by. Another huge benefit of control is you control which professionals are working to protect your interest, and guess who pays for those professional services? The borrower does. You want to know the value of the property, you hire an appraisal. The borrower pays for the appraisal. You want to make sure that the documents, the loan documents in the state are accurate. that they are legitimate. You hire an attorney, the borrower pays for that. So it's incredibly powerful, the control that you have with the professionals that are hired to protect your interest. You also get to control when you get paid and how much you are paid. So that's the how often that you're paid, and then the interest. You also are able to take the asset back if the asset stops performing. And in this case, when we say asset, we're not actually talking about the property. The asset is the asset that you're collateralizing, but your asset is that paper, that note. So when the note stops performing, which in most cases is because your borrower stops paying you, you can foreclose on the asset, and then you own the asset. So you own the asset at a pretty good discount. And that leads me to my last point. If you are a wise and sophisticated private lender, your investment amount is going to be less than the asset value. Absolutely, it should be. You should never, ever do 100% loan to value, meaning the property is worth $300,000 and you loan $300,000. You should never do that. If the property is worth $300,000, a good rule of thumb is the most that you should loan is 70%. Now, as the economy, is in a down cycle, then you might want to reduce that loan to value. If the economy is really booming and prices were soaring like we saw from 2018 to 2021, well, you can increase your loan to value, but just know that your loan to value should always be less than the property's value. So let's actually take a look at example between control and ownership. So we're going to look at Apple stock. This is something that most people are aware of. Apple stock is a dividend paying stock. And we're going to look first at you owning the asset. And the second way we're going to look at it is controlling the asset, meaning what if you could become a private lender to someone else who's going to buy Apple and have all the security of private lending while investing in the stock market? You're going to see real quickly that the asset doesn't really matter, but it is the power. And again, it is all about the laws that protect. Now, you could go out and try to do private lending on an asset like stocks, but the laws are not there to protect you the same way they are there to protect you in the case of lending against real estate. Remember, the banks advocate Congress and the lawmakers to create laws that protect them as the bank. So let's go ahead and look at this. You can get a share of Apple for $155. You actually have to have $155 to buy that one share of Apple. Now, Apple is a dividend. Dividends are paid out every quarter, so that's every 3 months. So you would be not getting any payments for the month of January, February, and March. And then in April, the month following that quarter, sometime between the 1st and the 15th, you should get a dividend payment. Now, in this case, a dividend payment for one share is 23 cents, which works out to be annually 59 cents. So that's what that looks like as far as a dividend payment every quarter. And that's what, at the time of this recording, that's actually what Apple pays out. Now let's look at what if you could loan your money to somebody else who is going to borrow your money to buy a share of Apple. So in this case, you would loan 70% of the value of the share of Apple, $108.50, and you have a borrower who's going to borrow. Now, let's assume that you could place a mortgage against that share of Apple and it's recorded a public record. And you have agreed with the borrower that you're going to get paid 16 cents every month on the 1st. So the borrower agrees to that and he says, yes, I will pay that 16 cents every month. That for you is it's about 0.049% return, which is horrible, but in the scheme of things, you're getting paid that every month. And then after 2 months, the borrower thinking, wow, I still have 2 more months before I get my first dividend payment, and I'm already paying more in interest than I'm getting in my dividend. Forget this. Mr. Lender, you can have your share of Apple. So now you get Apple stock. You get that stock for $108.50. You got it at a 30% discount. Now you're getting the dividend payment of 23 cents. And that actually worked out to you for this year, annual return just on the cash flow, 0.84%. So you're actually making more by becoming the lender. And in the case of a foreclosure, as well as you've got a baked in 30% equity right from the get-go. So you can see real quick that if you could apply the same concepts of private lending to investing in stocks, it doesn't even make sense to invest in stocks. You would rather be the lender to someone borrowing on stocks. So that's the concept that you can apply, but it works in real estate. So let's talk about this. We've got you, Blue Bay Capital. How does our turnkey solution help you become a better private lender? Well, if you're looking for to ensure security of your investments, knowing that they are being made according to the laws of the land, then Blue Bay Capital can help. If you are looking for truly passive income without the hassles of tracking payments from borrowers and accounting nightmares, if you're looking for a professional company to ensure that the structure of the deal mitigates and shifts risk, if you're looking for the ability to implement true leverage of time, knowledge, and experience, or if you're like the idea of diversification and participating in private loans with other sophisticated investors, then my Blue Bay Capital turnkey solution absolutely could work for you. So that begs the question, is turnkey private lending for you? Well, here's what my thoughts are. If you're looking for truly passive investments for passive income, then I believe it is. If you're looking for lower risk yet higher returns than other safer investments offer, then I believe it is. If you're looking for investments where you are in control, just like the bank, then my belief is that Blue Bay Capital's turnkey private lending solution is for you. My name's Edwin Epperson. Thank you for watching this brief video. This is my contact information, our website, as well as how you can reach out to me on social media. I would love to connect with you. If you've got questions, if you've got concerns, happy to answer those. And even more so, if you'd like to look at considering becoming a turnkey private lending capital partner, then we can walk through that and what that looks like for you. God bless, make it a great rest of your week, and continue to look out for more educational videos on private lending.